Hey guys, some follow-up on the euro. So some of you might be wondering what's going on. Euro's been rather strong. You know, we've had the Dutch elections didn't bring any major dramas, and now the French election's going ahead. It's going to be Le Pen versus Macron. Macron, an investment banker, a Rothschild's investment banker, so we know whose team he is on. And you know, the euro's gapped up recently. And you might be thinking, well, what was all that about? The euro's being strong. Is Francis wrong? Well, I'm always potentially wrong. I prefer to think of it as accuracy and inaccuracy. I have a technical template. If we run the upper 113 levels, just sub 114, that's a relative high 3 stop level for our euro USD continuation short, and then it's a fail. A pattern always fails near the end at the turn, so you'll get a few that'll win, and then there's one that fails usually, or you get a reversal pattern. Currently, the euro is quite chipper in its trading up, and a number of people are saying, well, what's happening here? Who knows? It hasn't run our stop, so our bias still remains to the downside on the basis of continuation, but there's a level at which, once it crosses that line, our view changes. We don't change too soon though, however. What's surprising me mainly is that the narrative is becoming quite clear. America has never, and I never had this view, but America was pretending that it was going to go on the cycle of, I say America, I don't mean to blaspheme all those lovely Americans. Let's say Yellen and the Fed, more specifically, were peddling a narrative of multiple rate cycles. Even 4, I think, was the first number that was pushed for this year, while the Eurozone was in QE, and that was supposed to be the reason behind the weakness. I never felt that America was going to do that amount of rate hikes. I think the one we've had is probably it for the year, and I think there's even scope for another cut later if events change. Things can change very, very quickly, particularly over a summer of discontent. So the whole notion, I didn't buy that. The Fed has never been accurate about the amount of rate hikes it's done. It's always gone horrendously lower than that which it's guided on. And the true people always seem, I always understood most people to understand that we're in a global depression post 2008, that there was wholesale bank failure, and we're now in an economic liquidity experiment that we've never seen the likes on, of the scale of which at a global level. I thought that most people already understood that, and that they can see mathematically it's physically impossible for rates to return anywhere near normal levels because of the number of debt. But amazingly, this is coming as a surprise, and with the euro starting to get some inflation, and maybe the degree of QE that they need to do slowing down, now everyone is saying, oh my God, time to sell the dollar, and the euro has been oversold. And now we're getting an up move. We've had a gap, we're getting an up move in the euro, and everyone getting really excited about the prospects of the euro. And is it a long now? Has it reversed? As I say, there's a level at which we'll go, this pattern is now done, and it's not a continuation pattern anymore, and it hasn't been crossed yet. But I'm shocked that it's taken so many people that long to get that, and so many people bought the Fed narrative. So seeing this optimism and saying it's all based on that, I have a problem with that, because I think most people that are in the markets are smarter than you give them credit for. You know, I'm not particularly insightful. The Fed just wasn't ever going to do that, and I thought that was already priced in. Now it's behaving like it's only being priced in now. So if we're talking about the fundamental narrative, not the technical, because I've told you I have a technical level at which we say, okay, no longer a continuation pattern. What does it mean on the fundamental level? Well, I think it's a bit more to this than meets the eye. I think the Trump and Merkel meeting, which was quite icy, I think Trump deep down will have said the Eurozone, more importantly Germany, has been getting away with far too good a currency level. And in terms of America's interests, because Trump represents that, he wants a higher euro. America wants a higher euro. Could be a narrative. I don't know for sure. Now for Portugal, Spain, Italy, Greece, the truth is they need to be out and they need to devalue. but they want to try, maybe they want to try keep it together. Well, the guy who was sent over to be ambassador to the Eurozone, and I can never get his name to stick, and that's the most ridiculous thing about my brain, you know, I still think he's the man who's coming to do last rites, because he even said so himself. So sometimes when you look at a guy cold face in the eye and he tells you exactly what he's come to do and he doesn't look like he's joking, well, you should maybe believe him. But you know, at the moment, the narrative about Deutsche Bank and all the EU banks, it's all been forgotten now. It's been swept under the table. It's all about, you know, the media's all focusing on you know, America slowing down a bit and Eurozone getting inflation and all of that. Until they have to focus on the banks again. Until they have to focus on Greece again. Until they have to focus on the debt narrative again. Which is why we wait for our technical level to happen. These things all have a season and a cycle. And until a level is clearly cleared, which says this is no longer now the continuation to the downside pattern, then we then we stay with our basic assumption. It's a big time frame pattern. Can it fail? It absolutely can, like anything. So the fundamental narrative is unraveling on the US rate hike side with a clear sign of weakness, and there's inflation in the Eurozone. Plus, you know, people are just becoming a bit benign about these elections. We thought they were going to be such a big deal. Maybe a lot of the sting out of that was taken with Brexit and Trump, and now people are almost benign to these elections now, and what's coming and what might come. So who knows what, in terms of narratives, is being spoken about. But we just need one flare-up again in any of those things, and those things can, and the Euro USD can sell off again. Or we can come to the conclusion that the dollar is far weaker than it needs to be, and there might be some wobbles in the stock market, and the euro has had too much of a benefit for too long. Germany's too bigger part of it, and you could have a massive melt up, and the euro could go on an absolute streak, which could be the end of its sell-off period since the 1.4. This was never an early doors trend trade. We had already fallen from 140 to as low as I think the 103s odd at one point. So we've already had, you know, a 37% loss in value. So this was a late trade continuation pattern, and the best trades are usually once the trend is established but still quite new and fresh. So, you know, it can fail. As I've always said, some people think I'm bought into this. I don't want to beat up on Euroland. My mum was French. I'm not particularly pro the American. I think they're the most, and once again, when I say American, I mean the Fed and the politicians in America. I think they're the most psychopathic, warmongering of their variety. I'm not trying to be down on Eurozone land. I love visiting Europe. If I go to Spain and meet Spaniards, I enjoy meeting them. I love the way they live and their lifestyle. Italy, Greece, I go all the time. I travel. Southern Mediterranean particularly, I have lots of empathy for what's going on in those areas, for the differences in their currencies. I go to Eastern Europe all the time, from the new countries coming on board. This is not a favoritism. I'm not emotively as emotively involved as people think. I don't need to be right about this. I don't need to be wrong about it. I just have a methodology for trading probability that eventually, you know, you will fail in a leg, and that tells you something, that it's now reached the point where it's oversold and it's now time to go the other way. But I don't come to that conclusion too soon. You saw in oil when we called short from 104. You know, you don't become a reversal taker on the very first rally. You would have been killed 5 or 6 times, including at the $50 mark for the better part of 3 months. So we have a template. What do I think will happen? I don't know. I'm going to keep watching and waiting. It is at a sort of twilight zone now. It's going to either go into my funnel and run my stop, and that will be fine. It's clarity. I want that. All I want is clarity. I don't like in between of zones, but while it's still continuation. The trend before it is still down, and that's still a continuation pattern. And as long as that remains, I say there can be another down leg until such time as the market proves to me that it's been oversold, and maybe there's a short squeeze and it spits up, that would be absolutely perfect because it's clarity. And then my bias becomes a long for the euro versus the dollar once it's proven. We don't want the first 5% of the move. You never should want the first 5% of a move. Why? Because it's often not the move. By trying to get the first 5%, you're catching falling knives the whole time or calling tops the whole time. And this is why we have a process and a template for doing what we do. So that's my view on the euro. Some people might be wondering, haven't heard anything on that for a bit. Yes, indeed. I also have a more general comment on Forex as a whole. And this is my take. It's becoming a bit of a tricky market to be. Trading long run patterns. Why? I personally believe politics can affect currencies. I think Trump has put the brake on dollar strength and wants the euro to be stronger, and the control structures behind him. I don't put everything down on Trump. And what's actually happening is very few currencies are allowed to go on a complete rip and breakout of a substantial move on big time frames. In other words, 4-hourly patterns, daily and weekly. Why? Everything is being held in a cluster. The minute one particular nation appears to be getting an export advantage by being too low for too long, the others put the brakes on it. They do some devaluation. So, you know, the dollar had an advantage, then the pound had the sell-offs in Brexit, and now then the euro had obviously before that been sold off since the Draghi do whatever it takes period. So everybody is having a chance to destroy. So what I'm seeing is lots of currency being created and no net big benefit to any one. They take turns to have small moves relative to each other, and once someone's had a turn, it goes round and round and round. So there's no major devaluations of one relative to the other. And in fact, emergings are in a number of setups where they are strengthening against the dollar. The lira is oversold, I believe. Yes, you heard me say that. It's probably a dictator state, but so are just about all the states you think that aren't. And we've got an inverted setup on the USD Turkish lira. So emergings, while they're watching all these majors beat themselves up, actually holding their own and paying more interest in bank accounts than the basic currencies. So once again, this is something that you might want to consider in terms of currency allocation. So it's a fascinating time, but are you on the big time frames seeing one real streaker of a trade that goes straight quickly to target on a long time frame over big moves? Not nearly as much. If you want to see that, you might have to spot and look at certain smaller currencies versus the majors and expect possibly that smaller currency to be the one that's being strong. So that's my take on currencies. I'm also watching a lot more of cryptos, which are genuinely trending and have excellent HVF compliance and setup. So this is quite a long clip. I don't want to make them all so long, but that's where I'm looking and hunting. I expect equities to be a bit dull during the May and go away period, possibly even some steam to be let out of them. But I'm not expecting huge crashes, although we always do a massive crash because we're in fantasy land. I'm not expecting it specifically in terms of the chart behavior. At the moment, there's no great downside volatility potential. So, you know, a little bit indifferent on equities, a little bit contained. You can trade the shorter time frames on FX, you know, little hourly setups and half hourly setups will get breaks and pops and make a target, and you can do quite well within that. I prefer to have the bigger views generally on my side, but I haven't got the patience all the time for the weekly views. It's tough to tie up money and wait and for the full-time stop. So that's my take on all things Europe, currencies and markets and where I'm looking right now. I hope that's useful. I hope you managed to make the distance. And watch out, I'll be starting my Patreon page soon. I've been making some investments and wanting to do this better and better and better. And I'd love to have some patrons. So I'll tell you more about that later. Thank you.